Hi, if you have any worldwide income and you are UK tax resident, then please watch this video. Hi, this is Gagan from 1-to-1 Accountants, and I'm a chartered certified accountant in England, and he's my colleague Amit.
My name is Amit Roy. I'm a chartered accountant from India and United Kingdom. Today we'll discuss worldwide disclosure facility. So Gagan, if you can start. What is worldwide disclosure?
Worldwide disclosure is if you are a UK tax resident and you have any income abroad, either taxed or untaxed, you need to declare that income into your UK tax return.
So what are the different types of income we are talking about?
Different types of incomes are like rental income, any capital gains, any interest on fixed deposits, FCNR account or NRE accounts or NRO accounts, or any bank accounts anywhere in the world. Agriculture income, if you have any dividend income, any share of business profits you have from any business outside UK. So these are the typical examples of income.
So we have also heard about this CRS agreements. What is CRS and what is this agreement about?
It's a common reporting standard. Under the common reporting standard, all countries have signed an agreement. England has signed an agreement over 100 countries where they will share a tax data among themselves. So through that agreement, the data has started flowing automatically between the different countries' tax department.
Could you give us some practical implications of the CRS? Like when you say UK has signed over 100 countries this agreement. So what are the practical implications?
So, practical implications are, typical example I'll give you, if you have an income, interest income from any bank account, let's say you have a FCNR deposit in India and you're getting interest on that. And that interest, what you've been earning, is been reported by the Indian governments to the England tax authorities. So that's how the information started flowing. So now England tax authorities knows getting information about a particular individual who's earning interest, bank interest in different countries.
Recently there have been some queries about LIC policies. You know, LIC policy is exempt income in India. So how it's treated here in the UK?
Oh yes, LIC policies are exempt in India, but you need to declare and pay tax in England. Any gains you had on LIC policies that are taxable in UK, and you have to declare that on your tax return and pay tax.
So it means that one income which can be exempt in India would be taxable in the UK.
Yes.
Okay, so because different countries have different
tax laws. Yeah.
Okay, and there's another a very common query about rental income. So how are the different rules for calculating rental income for overseas property for UK taxation?
No, if you have a rental income abroad and you declare and pay that tax on that rental income in the country where it is generated, but on the same hand, in your UK tax return, under foreign section foreign income, you have to declare that income within UK tax return, and you have to calculate that according to UK tax laws, and then you have to pay tax on that. Okay. And you will get a DTR relief if that country has a DTR agreement and you have paid some tax in the other country.
When you say DTR, means double
taxation relief. Yeah.
Okay. And similarly, suppose somebody sells shares or property inherited from their parents. So what will happen in that case?
Yeah, that will come under a capital gain tax. So any gains you made while disposing of your assets like house, residential property, commercial property, or any shares. So any capital gains you have made, you have to declare and pay tax in UK on that. And you will get capital gain tax allowance as well if you don't have any other income. And all the allowance and reliefs are available, which is available on UK capital gain tax.
Okay. So recently we have received queries from customers who have received nudge letters from HMRC. They are simple letters asking clients whether they have overseas income. So could you tell us more about it?
So nudge letters are a letter which HMRC is issuing to an individual where they have information and where they know that a particular individual have some type of income or gains abroad. So they are sending a letter, it's called a prompted letter, to an individual, asking them to declare what income do you have. So that letter will have four options, I believe. Yeah, one will say, do you have any income abroad? Second, if you have an income abroad, have you declared in the past? Third option, if you have income abroad and you never declared, and fourth option will be that you don't have any income. So you have to fill that letter. These are the time bound letters. It will, once they send a letter, there will be a certain date on the letter by which you have to reply them back, and according to that they will take it further.
Just now you used a term prompted. What is the significance of this prompted, unprompted?
Prompted and unprompted are very significant terms in terms of this disclosure, because once they send you a letter, so it means they have prompted you and asked you to declare some income which you have. And if you come under prompted category, there are higher penalties which can go up to 200%. But if you go voluntary and disclose your income, if you have any, before the letter has arrived to you, then it will class as unprompted. And under unprompted, the penalties are a bit lower. It goes up to 100%, but still we can negotiate more and reduce it further depending on the individual case. So that's the difference between prompted and unprompted.
So basically unprompted is voluntary disclosure.
Voluntary disclosure, and where you can give certain reliefs when at the time of penalties.
Right. Because you have gone forward yourself.
Exactly.
So HMRC will be more willing to listen to you.
Yes.
Okay. Yeah. Okay. So if suppose somebody, a lot of people hearing this would not know, or would be, it would be a surprise for them to learn that income which they earned in India, they pay taxes in India, is now taxable in the UK. And I understand it's not a new rule. It's been there for many decades. So what should they do now if they realize that they haven't been, tax affairs have not been how they should be? So what they should do?
I mean, if they have some income in the past and which they have omitted from their UK tax return, or they have never filed the UK tax return, so now they can come forward as a voluntary disclosure, as an unprompted disclosure, where they can go back up to 20 years, where if they have any income generated from rental income or interest income, any sort of foreign income they have, they can disclose into their they can disclose voluntary to HMRC under the worldwide disclosure facility, and where they will fill a letter of intent, and then within 90 days they have to complete their proposal, make a proposal and send to HMRC and pay their liabilities, and going forward they can start declaring their income under the self-assessment.
All right. Suppose somebody doesn't wish to disclose this income. Say, they think, I haven't got a letter, why should I? So what do you think? What is advisable?
See, honesty is the best policy, and if you have omitted something, it's better to come forward voluntary, where we can negotiate less penalties with HMRC, and then you can bring your tax affairs nice and clean. If you leave it to a later stage, if you leave it till where HMRC will send you a letter or prompt you, then in that case you will pay more interest on the liability, because that will accumulate and grow over the period, because you might get a letter maybe next year, the following year, after 3 years. And secondly, you will pay higher penalties. Okay. And HMRC won't, it will be very hard to negotiate a lower penalties in that scenario with HMRC. Right. So it's better to come forward and declare and make the tax affairs nice and clean, because under the common reporting standard, that information is flowing automatically. So sooner or later, the people who have income will eventually receive a letter. And once you receive a letter, it becomes prompted and you will come under a higher penalty regime.
Okay. Thank you. Thank you very much for today.
Thank you.
Thank you. Bye-bye.
Thank you. And if you want to know more about this, you can visit to our website. It's www.121accountants.com. I repeat again, it's www.1 as a number, TO1 as a number, accountants.com, where there is a web page on worldwide disclosure. You can have a read there, and still you have any queries, you can contact us, and our contact details are on our website. Thank you for watching this video.